If you've been trying to sell a house this past year, you might already know it's been one of the weakest on record. Now, that view has been confirmed by RP data, which says house prices fell by a national average of 4% during 2011, despite 2 interest rate cuts. House prices in Sydney and Canberra held up the best, but there were steep falls in Melbourne and Brisbane. And if you were renting, not buying, mining towns were among the most expensive places to look for somewhere to live. But Sydney's Vaucluse still headed the list, followed by Port Hedland in the Pilbara in Western Australia. With more on what we can expect in the year ahead, here's RP data analyst Cameron Kusher.
So the latest data we have is to October of this year, and over the year property values across the combined capital cities have fallen by 4%. Outside of the capital cities, if we have a look at house values, they're down a lower 3.6%. But overall, it's been a fairly weak market performance right across the country during 2011. And obviously some markets have performed better and some worse. Brisbane and Melbourne are amongst the worst performers over the year. And then on the other hand, Sydney and Canberra have held up relatively strongly, although property values in those cities have still fallen over the year.
What is the forecast for 2012?
We're not expecting much in the way of capital gains over the next 12 months. If anything, there is still some scope for property values to fall over the 12-month period, but probably not as weak as it has been over the last year.
What evidence do you base that on?
Obviously, we're expecting that interest rates will get lower. We also think that in certain markets, affordability is starting to improve, namely Brisbane and Perth, which are two markets which have really been underperforming since around mid to late 2007. We also think that we saw the National Housing Supply Council recently put out their data about the lack of supply in certain markets, namely Sydney and Brisbane. And we think that the lack of supply will also perhaps encourage a little bit of growth into the market as well as people compete for stock.
What about, though, the instability in Europe? Is that going to affect the housing market in Australia?
We obviously don't know if or when a solution will be found in Europe, and it's going to make the availability of credit for housing fairly tight to come by. It's already fairly tight to come by, and that's one of the reasons we don't think that we're going to see, if interest rates are cut, a jump back up in property value growth, because simply there's not going to be the finance out there available to people that want to enter the markets.
What do you predict will be the better performing markets around Australia?
Well, the better performing markets we think will probably be Sydney, Brisbane and Perth. And as I kind of alluded to earlier, Brisbane and Perth have been really underperforming for almost 5 years now. And certainly the prices you pay in those markets has widened significantly compared to the larger capital cities such as Sydney and Melbourne. So perhaps we will start to see some low levels of value growth returning to those markets later in 2012. And Sydney, still strong demand and not enough new supply. But again, I think any growth in that market is going to be fairly limited, but compared to the other capital cities, it's going to outperform.
Which states will experience a weaker market?
The weaker performing markets, you're probably looking at areas like Melbourne, for example. If you looked at the data earlier this year, Melbourne property values had increased by almost 50% since 2007, so it's had a very strong run-up in prices. And to a lesser degree, I think markets like Adelaide and Darwin are also going to underperform over the next 12 months. And coastal and regional markets will probably generally continue to be quite weak, with obviously a weak tourism sector, people holidaying overseas rather than holidaying at home, and just a lack of confidence in a lot of those markets.
Cameron Kusher, thanks very much for joining us.
Thank you.